Fannie Mae is enacting the 5% down conventional multifamily loans if they're owner occupied. So before, if you were interested in buying a owner occupant multifamily property, 4 units or less, it's considered residential. You could get a residential conventional loan. However, for single unit, obviously you can do 5% down. 2 units, you'd have to do 15% down, and for 3 to 4 doors, you'd have to put 25% down. So that's a huge, huge thing because that opens the doors for so many more investors, whether they're intro or not. Even if you're an introductory investor or if you're an experienced investor, you're bringing so much less capital to the table.
Yeah.
So, like, I mean, for example, if you've got a $1 million quadplex in Jack's Beach that somebody wants to buy as their primary residence, they only have to put 5% down. That's a huge deal. That's only 50 grand.
Yeah.
So you're putting 50 grand down on $1 million product, and you can use the other 3 doors income to qualify
Yeah.
for the mortgage. So that's a game changer in my opinion. And I think something that you guys should keep in mind for your deals and investors that you're working with in the future. So I'd love to hear your thoughts on that. And if you think that there are obviously positives to it, but do you think there are any negatives possibly from opening the space to allow more access to these multifamily properties for the average investor?
Well, I mean, I guess the biggest thing is I mean, obviously being smart with how you're doing things. Obviously, any investor is a great investor for us, but just making sure everyone's smart with what they're doing. Obviously, that's exciting for anyone in real estate that wants to get into investing, but just be smart with what you're doing. Make sure you come to the right people to make sure that you have the right numbers and everything good to go on that end.
I think with the 5% down on the multifamily would be a great tool for people that are working with agents or someone on our team that can utilize um, seller concessions too, because you could almost, especially if you're a licensed agent and there's a commission attached to it and the house is on the MLS, you're already getting that commission back at the closing table. You could put that towards your down payment. And I'm pretty sure you can ask, is it up to 6% in seller credits when it comes to, or maybe 3?
That was 3, but
Depends on
maybe
the
I'm
loan.
wrong.
I think it
Depends on the
depends.
loan
Yeah.
type.
I think it depends on the down payment amount.
Right.
So if you,
A is 6.
yeah, if you're doing 20% down, I believe you can get up to 6%. But I believe with conventional 5% down, I think it's 3.
Mhm. Well, on top of that,
But
I mean,
still, 3% seller concessions.
Yeah.
Yeah.
Buy your rate down in this market. It's
Yeah.
the way to
Probably
go.
equivalent.
It's the move
Yeah.
right now.
I would honestly recommend doing a 2-1 buy down to anybody that's looking to use seller concessions towards buying an investment property right now in this market, specifically because I believe that the interest rates are going to eventually go down. I mean, they're the highest they've ever been in a long time,
Yeah.
and they'll eventually go down. But what's nice is that with the 2-1 buy down, the money that you take from those concessions, it's really a quasi escrow account. So, as that money is loaded in from the 2-1 buy down, that's what's making your payments less for the next 2 years. Um, but if the rates go down in the next year or two and then you refinance and there's an overage amount, they will actually credit that back to you whenever you refinance. So that is a way that you can keep your payment lower and use a 2-1 buy down to get it into the 6s if it's in the 8s right now.
Yeah.
But not waste because it's a little bit cheaper, not waste all that buy down. Because if you buy it down from 8s into the 6s on a fixed rate, it's way more expensive. On a 2-1, it's temporary, so you will have to qualify for that 8% mortgage, but you can kind of reduce your payments on the short term with the precursor that you will be refinancing once these rates calm down a little
Yeah.
bit. So I definitely recommend that.
so talking about all these high interest rates, how has it kind of been? Obviously, we are in a high interest rate market right now. What are some speed bumps or maybe um, some things that are getting in the way of some of your buyers or investors when it comes to higher interest rates right now?
Yeah, for me, I mean, being 26, I mean, all of us, I mean, a lot of our market or people that we work with are generally going to be kind of before 30 years old. So being able
Mhm.
to afford a house, especially for people that are uneducated, that are renting right now or just learning the process, to them, when they see 8%, they're like, no shot
Scary.
I'm going to buy. Like,
Yeah.
there's like
Yeah.
no way I'm going to do this. But the biggest thing I try to tell friends, family, whoever it may be, just talk to a lender. See what you might actually be able to afford, because you might not
Yeah.
know,
Mhm.
you might actually be able to afford more than what you think. And I mean,
Mhm.
going back to the refinancing side of things, you can always worry about that a year down the road, figure that out, and get
Mhm.
those seller credits now, get your closing costs covered and stuff like
Correct.
that.
Right.
And I think a big thing for me, a lot of people that are in their mid 20s right now have been going towards new construction. Me myself bought a townhouse down St. John's Silverleaf. Just getting those seller concessions, closing costs covered, is huge for somebody that's 2 or 3 years into the working world,
Right.
Yeah.
Yeah.
and just starting to build and grow. So I think it's a speed bump is people thinking, oh, 8%, no shot I'm getting into this market
Yeah.
right now,
Yeah.
and trying to get them back on board and jump on the ship with you, and go out and buy stuff even in this
I
market.
think what a
But
lot of people don't understand, though, that are in that boat, is that although interest rates are super high right now and it's harder to, swing those payments, if you can use the tactics like, buying the rate down to and buy down, seller
yeah,
concessions, things of that nature, to get into something now's the best time to buy,
yeah,
because now you're going to get sellers that are hurting, people that are willing to negotiate. You're going to get lower prices on stuff.
yeah,
And really, at the end of the day, you make money on the buy, not on the sell.
yeah,
Because if you wait until interest rates go down, there's so many people on the sidelines waiting to
yeah.
buy.
Everybody's going to jump
If
in.
everybody's going to jump in, it's going to be a feeding frenzy whenever the rates drop back down. That's the point where you want to sell.
Yep.
So really, now's the time to buy, with the precursor that you're gonna refinance. You're gonna use some buy downs. You're gonna negotiate, get a good deal on the upfront, hold on to it for a few years, and then whenever those interest rates go down, your equity is going to go up.
Yeah.
So really stress that to people that are looking to get involved now but are kind of on the sidelines,
Yeah.
kind of on the fence.